US dollars are getting weaker in these months, especially in the past years. United States will focus on the strong US dollars. What's the impact of the weakening US dollars of the economy of United States?
Well, the theory is that if you weaken the dollar, then you can export more. So your exports are more competitive. And exports minus imports go into the GDP equation. So therefore, we're growing at a higher rate. The reality is that we could get into what I mentioned earlier, this kind of ugly contest where everybody is trying to devalue. And then, nobody devalues as a result. So I think that it is a dangerous sort of strategy because there could be retaliatory sort of measures that take place. The theory is our exports are more competitive, but it assumes that nobody does anything else. So I think that's naive. So I think that there probably needs to be some revaluation. The most obvious revaluation is with respect to China. Okay, and that's not going to happen on the open market because they're pegged. So they need to revalue themselves. That is the most obvious imbalance. There will be some fluctuation also between the US and Euro, but again, I think that just messing with the exchange rates, that is not going to solve the fundamental structural issues that we face, where we are greatly leveraged as a nation. We are spending way more than we're getting, both in terms of our trade and in terms of our fiscal policy. That needs to be fixed. Okay, and just hoping that the U.S. is going to devalue, is going to fix everything, I think is naive. It goes way deeper than that.